Hello everyone, it's Chuck Carnevale, co-founder of FastGraphs, the Fundamentals Analyzer software tool. And as one of the founding partners of the Dividend Kings, I normally write about dividend growth stocks. However, in light of what's been going on with the pandemic, etc., I thought I might change things up a little bit with this video and show you a kind of a growth story, and more than that, a company that's had really tremendous momentum here in spite of what's been going on with the COVID-19 crisis. So this particular company is 26 Inc. And 26 is a company that works with lasers, optics, laser systems, electronic devices, and etc. It's really a cutting-edge, tech stock here. And I want you to look at its historical growth rate. I want you to notice that the company has some cyclicality in its growth, but I also want you to notice that the stock price has tracked its operating earnings growth significantly. And, there are times when the earnings have been down and times when they've risen. I also want to look at this stock from the point of view of operating cash flow, because even though the company doesn't pay a dividend, I think operating cash flow is very important. And again, the stock price is highly correlated to operating cash flow. And I do want you to notice the estimates on operating cash flow, but I also want to look at other metrics such as owner's earnings. With owner's earnings, you see this enormous spike in estimated growth going on for the next year or so, and then tapering off again. But one thing that I do want to point out is if I go back and look at what's been going on with the stock, it's had tremendous momentum lately. And you can see that when you look at the stock price in relation to its historical operating results. We've had this huge spike. And one thing that's explaining that, Zach's did a report. I do want you to notice that 6 months ago, the company was forecast to earn $1.89 this year. 3 months ago, it was $1.49 and $1.40. Current estimate, and there are 15 analysts making it, is for $2.03. So we've had tremendous increase in analyst estimates over the recent times here. So the stock price has really reacted to that and gone up dramatically. However, today we've got a little bit of a break, and you can actually see that the stock price is down about 7% or more today. So what we're looking at, it's actually down 8.4% as I'm doing this video. So the fact that, if you're looking for a stock that has momentum, it has increasing analyst estimates, this really could be one of the stocks you might want to take a look at. It's a growth stock for the future. It's not necessarily a dividend paying stock. It's B+ rated. It has 52% debt to cap. It's a very, very interesting technology, and I would encourage you to take a closer look into this company to see if you can learn more about it. I like a lot of what I see here on the fundamentals, but again, it's not for the average dividend type or retired investor. This is more of a growth story, and it's a momentum story going into what looks like some really increasing estimates. I'd take a harder look at it if I were you.